turn as far as allocation is concerned towards India? Because as you said, India is not the only game in town, and now that seems to have become part of the discourse. Till about 12 months ago, everyone was saying that India is the game in town, or the best market to invest in, the most preferred emerging market, and so on and so forth. Do you believe we started to believe in our own myth, or the market started to believe in its own myth?
Well, if you think about it as global investors, we are happy when India is doing well, but I think it's a sign that other parts of the world are recovering as well. If you look at what the Fed chairman said in the US, for example, if you look at where Europe is going, it just means there are more opportunities worldwide, which in turn are great for India's global companies. If you look at some of the companies with a real global footprint, including our IT companies, global growth is great for them too. So when you look at our portfolios, these are things we look at as well.
Speaking of the Fed, do you see a significant impact as and when the Fed does decide to hike and move on the path towards normalization?
If you look at the last time when we had the taper tantrum, a lot of money left many countries very fast. And in that sense, we had corrections in currencies and everything else. And nothing much had changed. It's more that it came as a surprise to people. If you look at what the Fed has done since then, they've been really telegraphing their intent very, very clearly. A lot more precise instrumentation about what data points they're looking at, what they expect to see before they will make that. So they've given a lot of time to central banks around the world to really prepare themselves and for investors to have the strategies ready as and when the hike comes through.
Okay, so you think that perhaps this time around the markets are better prepared?
I think I would say countries are better prepared as from a reserve standpoint or from liquidity standpoint.
Can't be sure about the markets.
Markets are a function of so many factors, and I think we will see there will be a round of investors which would like to follow the typical path when a rate hike comes through. But a lot of other investors who are aware of that and know that is step one, they are ready for step 2 and 3. And in that sense, there will be some volatility, but may not be as much as it happened last time, just because the telegraphing of the Fed's intent is so much better.
So given, where global growth is, given where valuations are today, and some of the other factors that you look at, which is the best game in town? Or which are the best games in town?
Well, as I said, India is not the only, but still one of the best ones around. And I think we still think, if you look at corporate India, where we see the improvements come through, look at India's fiscal situation, we look at the current account deficit, and we look at some of the promises the current government really wants to follow through on, I think the optimism is so much more for us as investors. We like India a lot. We've been here fully invested for a really long time. The other markets which I think have some potential, we look at Mexico, for example, a big beneficiary of NAFTA, close to America. Also today's technology, if you look at Twitter and all the other social media places, they have made proximity to the big market important. For example, if a clothing manufacturer were to make something in China and ship it to the US, it takes 2 to 3 months, or you can spend a lot of money and fly it over. Versus that, if they were to put something in the stores and someone sends a social media message that, wow, I'd have bought this top if only the sleeves are a little longer or something. If you're in Mexico, you can bring it in a week. If you're in China, it costs a lot more.
Do you see 2015 being, a harder year for emerging markets? Because, I mean, we've seen what's happening in countries like Russia and Brazil, for instance, on account of commodities. But do you think 2015 is going to be an even patchier phase for emerging markets?
It can be answered in a few ways. For us, when we look at emerging markets, we understand it's a very geographically and economically diverse basket of countries.
Which unfortunately get clubbed into this basket.
Together. And historically, if you look at many indices, a lot of the indices are built mainly by geographic location, Asia, Japan, or look at Europe. When it comes to emerging markets, it's almost every continent is featured in that. So we try to break up emerging markets into a few different ways, and one of them could be what we call global growth proxies. So these are countries that actually benefit from the global economy, increasing. So example could be Korea, Taiwan, some of these technology exporting countries, shipbuilding countries, countries with machinery exports, which fit there. Then you look at the commodity countries, which actually benefit from energy demand worldwide. Other commodities, be it Malaysia, Russia, Brazil, and a few others there. And then we look at the countries which are large, but these have local growth drivers, be it India or China. China trying to focus more on the consumption side and less on the infrastructure side in India. So when you look at them that way, we do find opportunities at any one point. So the index may or may not really go anywhere, as it has not done a lot. But if you look at within these segments, if we get those themes right and we find bottom-up ideas, you can still make a lot of money in emerging markets.
So speaking of bottom-up ideas and getting the themes right, so from the growth fund perspective, what would be the key themes that, for instance, you would look at today?
So if you look at our India fund, for example, what we do like and we have a large holdings in would be some of the private sector banks where we see sustained improvement not only in margins, but also just in the product base, and they don't have some of the, I guess, the NPL issues that some of the public sector banks have.
So you wouldn't look at the public sector banks at all?
Well, we do like some of those public sector banks, and if you see our holdings, you'll see there are public sector holdings, some of them. And there are different valuations there, which makes them a bit attractive. But the real driver in the end comes back to management. If you look at some of the banks where the government is really sincerely trying to change how the bank thinks, and we believe some of them will do better on that, those are some of the banks that we would like at various points in time. So that is there. And I think our sense is, if you look at India's public sector per se, there's a lot of talent in the private sector willing to work in the public sector, provided they get enough autonomy and the right incentives. So we do like that opportunity if the government does let that happen.
Well, they're hoping to do it, at least as far as the banking sector is concerned. But let's see.
But like everything else, look at India per se. I mean, there are some states that are ahead of the others in terms of economic development. You'll see the same with the public sector banks. So we'd be really look at them case by case and like them.
Okay, so beyond financials, what else?
That is, well, the other thing is, if you look at some of our pharma companies, there are some really world-class pharma companies we have in
Valuations
India.
Not looking stretched there?
Well, there it's all about the growth rates you expect them to grow at, market versus us. And for us, some of them, if you look at our top holdings, which are publicly available, you would see holdings of companies which we really think are improving their margins by squeezing out costs and squeezing out inefficiencies. So where then it's a question of our expectation of the company's growth rate, earnings growth rate versus market. And we do like some of them where we think there's still opportunity there.
And, in terms of some of the small cap plays, because again, we've seen some fairly exciting stories developing there. What looks good to you, whether it's from a sectoral play or an India play?
I think if you look at the key drivers where India's growth would come from, that be infrastructure, be housing, be consumption, there are small cap companies which fit these different segments. So there could be smaller ancillary suppliers to the automakers, for example. There could be machinery suppliers to the large capital goods companies. There could be suppliers of building materials to the property developers. That's why in a small cap space there are some really well managed companies which have opportunity there, we think so.
Okay, so given where we are today, and we've seen a sharpish correction as far as the Indian market is concerned, and most people now seem to be revising downwards their Sensex targets for the year, and in that context, do you see a further downside, at least in the short term, as far as the markets are concerned, or do you believe that we could see people now sort of re-entering the markets at these levels?
I think if you look at from a hat of a foreign investor and a domestic investor, I think for the domestic investor, if you look at anyone who has a business or is working, I guess the sense I get, and I was in Mumbai a week ago, 2 weeks ago, and anyone I talk to generally has a feeling that things are getting better. They want to take money that they've stashed away for a long time and try to find a way to put it back in the business because they believe things are getting better. So the grassroots feeling is very good. Now, when you can kind of marry that with global investors' view that India still looks very attractive for the long term, you start seeing both come through. So, as I was saying, we do expect, if you take a 4 to 6 year view, because India is not it's a cyclical recovery, but it's a structural story. And in that sense, the long-term money that comes in, I think would really find good opportunities at these levels as well. Okay.
So, in your conversation with the government, what is it that you would like the government to address or clarify? Or while it's great when they talk about the reform agenda and they talk about Digital India and Make in India and so on and so forth, but specific concerns or specific clarifications that global investors are seeking from the government?
I think there are a few. One was on tax, where I think the government so far given quite a reasonable clarity on which they do, which I think is great. It does affect foreign investors for a variety of reasons. One is very often it's not their own money, it's their clients' money. So they are more of fiduciary duty to ensure that it is kind of treated right. But the other things are, we do look for more stronger messaging in terms of commitment to go through some of the reforms which may be slowed down for a host of reasons, including political or just
Which
economic.
ones in specific?
Well, for example, the two big ones that most people seem to talk about are the land acquisition bill and even the GST, for example. And there we understand there are limitations on what can be done, but as long as we see a path towards making that happen, and maybe a plan 2 in some way, or a kind of plan B. Okay, if we can't push these through, we will do these 3 measures to ensure that a gist of what we're trying to accomplish still gets done. And as long as there's commitment for that, and I think the finance minister being here next week would help with clarify some of those as well. I think those are things investors are looking for. It's always, I think for a world that is so unpredictable, everybody wants predictability. So if someone can tell them this is where interest rates will be a year from now, this is where markets are, if the government can, this is what you want to do a year from now, I think that's what people want to hear.
When people call you today, what are you telling them about India?
Well, I'm saying I'm just saying I just can't get enough of India.
You can't get enough of India?
It's just hard finding good companies with enough quantity to buy. And that's the other thing, is that Indian companies are, the good ones are hard to get back into in terms of the quantity that would you like to have a significant presence in your portfolio. And I think some of our long-term investors have learned by watching others, hopefully, not by ourselves, but that it's hard to exit and come back into India. It's not a tactical place you can move $1 billion in and out very quickly. So if you like something, you just stay vested, wait for the management to keep executing, look for road signs that things are on track, and that's how you really make the compounded return one wants to make.
Purva, it's been a pleasure speaking with you. Appreciate you joining us on CNBC TV 18 and taking us through your thoughts on India, the global growth story, and of course what the government should be looking at to try and convince foreign investors to invest in India, incremental and of course new money as well. But thanks very much indeed for joining us on CNBC TV 18. It's been an absolute pleasure.
Thank you, Shireen. Thank you, CNBC.